Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday. It's October the 12th, 2012. As we do each Friday, I'll be going over every single market that we track at PerfectStockAlert.com, all 19 of them, so that you guys know everything I know moving into the week ahead. I recommend that if you didn't watch Thursday's market analysis video, I recommend you do that. We went over the long-term charts of the U.S. markets, and that's a very important piece of information when looking at the week ahead, so that's something you should definitely do. Let's get started looking at the Australian market, the AORD. We can see that this move has actually ended this little bullish trade that we had moving on here. Nice move to the upside, continue to advance. The stuff eventually got stopped out, and then we're just sitting here in cash watching. Nothing here to do at this time. Right now we're just consolidating. You're going to see a lot of consolidation on a lot of charts, and right now that's all you can do is simply sit back and wait and see what happens. You can get in a consolidation period, you can get a pullback, but it doesn't mean the same thing to me as a sell opportunity. Pullbacks are just little tiny weak situations. The overall trend is what's more important to me, and the overall trend is the way I want to actually be betting, waiting for a big moves to materialize either to the upside or eventually a peak, which will give you a series of lower highs and lower lows. Right now we don't see that, so just continue to watch this and wait in cash. The Dow Jones Industrial Average, if you watched Thursday's market analysis video, you know today's close was very important to the overall actual long-term bullish channel that we saw on the long-term chart. So, and with today's close, we actually closed below that line. So that's an important piece of information. And today's high on the price activity actually came up and found resistance to that line. I don't want to go back and show you guys that same video again, so I'll just give you a long-term 6-month view of this same chart and kind of draw the trend line where it would be. Okay, this is the 6-month daily chart of the Dow Jones Industrial Average. We're talking about this pullback that we've been seeing for this past week, and whether or not we would close below this trend line right here. That's the actual bullish channel that you've been in for a while here, and this is very important. If you don't close below that, you can't call it a peak, you can't call it a breakdown, you can't call it anything bearish, and we actually did close below this point. We're also now on the 50-period moving average, so you can see multiple different scenarios here. I'm not going to short this, and I'll show you why. You have had 4 consecutive days to the downside, 1 day to the upside here. You are on the 50-day moving average, and you have 2 candlestick formations that are simply inverted hammer candlestick formations. Whenever you run up and you see them at the top of a pattern, it's a shooting star. When you see them at the bottom of the pattern, it's an inverted hammer. It calls for a bounce. I would also expect that bounce, being that the ultimate oscillator is down below the 30 line. That's where you get oversold conditions and you start looking for a bounce. So I don't want to take a short position at that point. If you are short, there's 2 different ways you can do that. You can either be short here because you close below that major uptrend line, your stop is set off the high like this. That would make sense, but you got a lot more risk on the table. Another way to be trading this would be like a momentum trade and say, okay, I'm going to short here with a stop set off this candlestick high. That way, if we continue to see lower highs and lower lows in the candlestick formations, you're fine. You don't get stopped out. You can make a little bit of money to the downside, but eventually you will get a bounce, and that bounce should take you, let's say that on Monday you actually sell off some more or something like that. Eventually you will get a bounce to come back up here and find resistance, basically the same area that you're trying to get short now. That's what I'm waiting for, a better short opportunity where the ultimate oscillator is actually at the 50 line or higher. That would give me a better short opportunity. The French CAC 40 index, I don't really see anything I can use here. We've been leaving this one alone for a while now, 2 or 3 weeks here. We don't really see anything we can use. There's just really low volatility, and you're just kind of moving sideways in an overall situation. Looks like this, but you don't really have another shoulder formation to confirm a head and shoulders pattern. It's really sloppy, so I'm just going to leave this one alone and pass on it. The Milan Index, the MIB, the same basic overall story, a little tighter trading pattern than we're seeing on the French markets, but basic overall story is the same. We haven't really broken down. We haven't really started making these strong moves to the upside. We're still finding support at the 50-period moving average. This guy hasn't, he's just drifting sideways, basically consolidating, which you're going to see again and again on many chart patterns. You had built this consolidation pattern in the past over here, and then you had to break out of that point, advance from that point, sold back off down to within that channel, and that's basically what we're just doing now. It's just finding previous resistance acting as support, and nothing to do right at this point. We need the market to actually advance before these will start taking off to the upside. Right now the markets could continue to move lower next week, or we might get that little bounce, but that bounce is going to be really important to see. Do we get a series of lower highs? And that would be indicative that maybe we'll start to peak out there and you want to get short at that time. Right now we just don't know. The German DAX composite probably shows the best overall scenario for Europe. You can see that you just have this descending wedge pattern going on. It's just consolidation. It's been going on for several weeks now. We're finding support at the 50-day moving average, still in a bullish uptrend. There's nothing here that we can say, oh, this is the top or anything. It's just consolidating. It's preparing to do something, but it hasn't done it yet. Gold also doing the exact same thing, consolidating within the channel it developed several weeks ago, so nothing I can report new for you at this particular point in time. We'll just continue to watch it. The Hong Kong Hang Seng Index has actually stopped us out of our previous short attempt over here a couple days ago. We actually saw a lower series of highs, and we just reversed back to the upside and stopped us out. This is basically a worthless trade. You're not going to get any opportunity here on the long side either. I don't actually like the overall chart pattern. It's not showing really strong consolidation before breakout. It's actually getting wider. The pattern's getting wider as the actual overall formation forms here, and it's just not something that I'd like to mess with. The India Bombay Stock Exchange is actually still consolidating as well. We've not messed with this one for a while since we got stopped out over here, and this is actually just consolidating like this. This is really kind of boring. Nothing we can do with this overall trend pattern here. I continue to watch it, but I don't see anything I can use right now. The EWJ, or the Japan iShares, is one we marked yesterday on our website at perfectstockalert.com. Remember, all these charts are kept on our free website there, and they're updated every single night, advancing stop loss limits and showing charts that we think that could be a buy or sell signal, something like that. This one's still in a actual bullish uptrend. Simply, if you look at the high points and low points, you can see that you are actually still trending higher. Very wide pattern. That's fine. You can actually take advantage of that. We marked it as a something I would be a buyer of as of yesterday. So this morning, you could have been a buyer of that situation here with the stop set off of this low point here. The only way this is going to work is if the markets eventually do reverse next week and start to move higher. If we don't see that, we start to see U.S. markets and global markets starting to break down or testing their 200-period moving average, this is likely to break down as well. Longer-term chart or longer-term picture of this chart with the 2-year weekly chart, actually still very bullish, and I think this is a good trade here. Looking now at the symmetrical triangle on the FTSE, London Financial Times Index, this again the same thing that we were talking about with all the European markets. All you're doing is consolidating. And what you do in this pattern is you start off with a wide pattern and then you start to tighten up. And about 70% into the overall formation, you start to get a situation where you will break to the upside or the downside. Nobody can tell you which direction she's going to break. These will break in both directions. So you need to wait for the breakout, then trade in the direction of that move. And that's an important little piece of the puzzle there. Right now, we are still in a bullish uptrend. You have higher highs, actually, you have downward trend right here. So you could argue that it's just going to move sideways, and that's fine. It's going to continue to do that until something happens. And right now, I would expect that to be a break to the upside. Close above that line would be a buy signal for me. And also, if you were to see a close below that, then you'd see it as a sell signal. We'll look at that when it happens. A quick glance here at the NASDAQ. Whenever we're looking at this chart, you got to remember what we pointed out to you guys on, Thursday, on the longer term chart, the 2-year weekly chart. We haven't actually broken the major uptrend channel there, so I can't sell this at this point in time. You do have another sell signal though. You have this little head and shoulders formation that's actually confirmed itself. You've seen this little move here, and now you've closed below the neckline. You simply measure that distance out by taking the high point of the overall pattern here down to the neckline, do the math, and then subtract that from the breakout point. Tells you how low you can expect price to fall. Basically a test for the 200-period of moving average. Again, I'm not going to jump on this one for multiple reasons. Right now, we've seen that we've got 6 consecutive days to the downside. All right, 1, 2, 3. You can do the math, and then you also have the ultimate oscillator selling off below the 30 line. This is not an area where I want to take or initiate a short position. Give me a bounce, give me something I can work with, and then we'll talk about it. Right now, I'm not going to do it. Those of you guys who are already short, if you didn't get stopped out, and then you're still short, then that's fine. Keep a tight stop on it. If you continue to move to the downside, the 200 period, that's great. You can take continue to advance your stop till you're eventually stopped out. Looking now at the XOI oil index, and nothing I can really do with this chart. Again, we may be looking at a descending wedge formation here, but it's really just pull back to previous resistance. Here was the resistance point. We sold off from there, formed this little bearish channel here. Told you to watch this for a breakout to the upside. Once you got that, that would be your buy signal. She makes a nice move here, then peaks out, and she starts to just consolidate and pull back here. But the pullback isn't just like you typically see in this scenario, where you just get a sharp little decline here, reversal, and we start continuing the uptrend. Instead, we're just kind of pulling on this little bearish channel maybe. There's many different things this may develop into, but right now, I'm just going to watch it. Looking at the UUP of the PowerShares DB US Dollar Index Bullish Fund, you can see that we are just mimicking what we're seeing in the overall market's consolidation, just moving sideways. There is no reason to be a buyer of this. Betting on the dollar is forgetting the fact that the Fed is printing money to devalue the dollar and inflate other asset prices. So right now there's nothing you can do with this trade on the short side because you're just consolidating, and at the same time there's no way that fundamentally you can support an argument to the upside on the US dollar. Looking at the Russell 2000 Small Cap Index, same overall consolidation we've been seeing. Other charts are showing us consolidation that moves like this in a sideways pattern, and then there's several others that are showing us consolidation more looking like this basic overall pattern where you're moving down here. Nothing that you can look at this and say, oh, it's very bearish. No, it's not. If you look at the long-term charts, you've not broken the actual bullish channel formation there on the Russell 2000, and you're just consolidating. Still a very bullish pattern. I'd be watching this for reversal to the upside, but you'd need to see market participation. You need to see multiple markets actually moving to that particular direction. If that doesn't happen, then we can start to see other things develop. But I won't get long this again until I see serious conviction by the market to the upside. The S&P 500 Large Cap Index, or the SPX, same overall story as the Dow Jones Industrial Average. It has broken its bullish uptrend channel that we talked about and showed you guys on the Thursday's market analysis video. So that again would be something that you could be trading to the downside there. It would make sense. I'm not going to do it simply because you again, we're down here in the ultimate oscillator 30 line. I need a bounce. I need to the 50 line or higher before I can even consider a short position. So right now I'll be waiting for that. We'll get some kind of a bounce. We may see that early next week. We may also continue to sell off and then get a bounce, which just simply take us back up to this level we're at right now. In other words, you have move here sideways, then move here, then bounce up here, fail, and that would be a downtrend by a series of lower highs, lower lows, and you would be making sense to short at that particular point in time. Silver looks just like gold, moving sideways, consolidating with the rest of the overall markets, not really making any major moves. Nothing you can do with this chart until it breaks out or breaks down. One of those two things must happen before you can take a direction. The Toronto Stock Exchange, really not got anything I can do with it either. More consolidation, a lot more volatility in this particular chart. Main story here, this is the previous resistance point that you broke out of, so they're going to be acting as support. You'll note that's also in line with the previous low point here, and your low point is coming up right now, as well as the 50-period moving average, as well as the ultimate oscillator down at the 30 line. All these things to look for a bounce or support, not to be looking at this as saying, this is a great short opportunity. It's not, so I just sit back and watch. Looking now at the VIX, or the Volatility Index, this runs the inverse of the S&P 500, and we don't really have a clear signal here either. Again, just consolidation, but this is a much wider formation. The last time we had a good trade was over here. We sold off on this one, and then you start to consolidate in here a little bit, and then jump up above it, and sell off back below it, and back up here. Lower series of highs on this one, but you also have a higher series of lows. So just basically you're moving sideways, consolidating, and there's nothing you can really do with this as far as direction prediction, because you don't really know. You've got conflicting signals, and this again is an inverse picture of the S&P 500. So the S&P is not an easy little short either. So right now I just wait for things to clear up before you try to pick a direction. Looking now at the Wilshire 4500, you can see the EMW is actually just consolidating. That's a very nice bullish pattern actually going on right now. And the long-term picture that I didn't actually show on Thursday's chart, I didn't show Thursday the long-term picture of this particular chart. However, it is still in its bullish uptrend, and there's on the long-term chart as well as the short-term chart. You're just consolidating here, and there's nothing you can do with this. Absolutely nothing as far as predicting that it's going to fail, or it's not done yet. So right now we're just consolidating, waiting, and watching. I will point out the ultimate oscillator again down below the 30 line. All these signs are telling you look for a bounce to the upside. Not see it yet, but it will happen sooner or later, or we will get a breakdown and then we'll get a bounce to go short. But it will really depend on what chart formation happens and then what happens next before we decide whether we're going to be a buyer of that bounce or selling. If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. I'd like to thank you guys for sharing our videos online and referring your friends. Our website has been growing exponentially, and we appreciate that. Thank you. God bless. Enjoy your weekend and be safe. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.